Hi there, in this video I'm going to explain a few concepts that have been presented in chapter 1, and I hope you find this short video is useful for you as you study chapter 1. First of all, what is the difference between data and information? The data in general, it's some numbers or alphabets that can be put together, but it doesn't give value to the user to make a decision based on that data. So for example, when you see all these alphanumeric numbers and letters here on the slide, it might not give you any meaning. But when we put this data in a general format like an invoice, where we can put the first one as a date, the second one as a number, the third one as a customer name, and the invoice detail, then we can tell that here the information can help the user of that invoice to make a decision. So our job in this course is to help you to transform the data into valuable information. But there is a cost for that. The cost is usually comes in time and money. How much time does it take us to produce this information, and how much salary are we going to pay to the labor to produce this information? So this is the critical point that we should think about when we produce useful information. So the benefits of producing the information should be higher than the costs we spend. And for the information to be reliable and qualitative, to understand and make a useful decision, we should look for some qualities in the information. So the first step is to transform data into information. And the second step is to judge whether this information is useful or not useful. How can we make a good judgment? We need to look at these factors. First, we need to look at the cost. The benefits of generating the information should be higher than the cost. Second, if the information has errors, which errors we should think about? We need to think about material errors, which means any error above a certain amount from assets or net income, we should think about this one. Material errors, for example, if we take total assets in the balance sheet multiplied by 5%, we say any error in the financial statement above this threshold should be material and we should investigate it. If it's below this threshold, then we should ignore it. So this we mean by materiality. Second, we talk about the relevance. How much the information is relevant to the time frame. For the present time, it should give me confirmatory value. It means identical amount to what we see on the financial statements and help me to predict the future of the company. So the financial statement should help the user to predict where the company is going to in the future. But on the second point, we need to check the reliability of the financial statement, which we call it faithful representation. The financial statement should be complete, which means nothing is missing, should be neutral, which means no bias in the financial statements. It means we shouldn't produce a certain set of financial statement for the tax department and another set of financial statement to the management. It should be one without any bias. Then the financial statement should be free from unintentional errors and fraud. So the financial statement should be free of error. But when we talk about error, what kind of error? It's usually the material error, not immaterial. And if two persons look at the financial statements, they should come up with the same decision, which we call it comparability. And then the financial statements should be documented by evidence to show that the numbers included in the company's report are verifiable. Of course, the financial statement should be presented to the users on time, which we call it timeliness, and in a language that can be understood by the users. So to judge the information in a report that are useful or not, we should look for all these characteristics. Here the language. So The transactional information between internal and external parties, how does it flow? First of all, we usually have in any business, people and machines. They get engaged together to make some activities or processes. For example, sales activities, or expenditure activity, or production activity, financing, human resource. These are activities are conducted in any business. These activities usually produce information to help in making the right decisions. Who will take the information? It's either internal users or external users. Internal like management, employees, externals like customers, suppliers, banks, government, and so on. And those two types of users, they get engaged together in transactions. The whole course of accounting information system will help you to understand the information included in these transactions and the documents required for these transactions. Let me give you an example for that. Here is the accounting information system where we see the internal users, and here is the vendor, which is external users. How the internal and external, they get engaged together. First of all, we send order to the vendors. Accordingly, the vendor will submit the goods or services along with the invoice, and then we send the payment to the vendor. So here we see some information is going between the two parties, and some documents are also flowing between the two parties. Our job in the accounting information system is to manage the information and the documents. And the second thing, look at the investors. Here the investors, they give funds to the company, and in return, the company will pay dividends to the investors along with submitting the financial statement to show them the company's situation at the end of the year. So here you can see the flow of information and documents. Then go to the next one, the creditors, where we take loans from the creditors and we pay back the loans along with the interest. And we show them some financial statements to get an idea about the future of their credits. Look for the next one, banks. For the banks, we deposit our money, we make withdrawals, and by the end of every month, we get the bank statement to know where we are. So as you can tell here, the transactions between internal and external users include information and documents. And the accounting information system should control both of them. Then if we look at customers, the customers, more or less, they do as the supplier. They send us the order, we send them the goods and services along with the invoice, and then we collect our payments. And then look at the employees. They work for the company and they get their salaries. For the management, the company will submit the management reports with the financial statements, and the management will create the budget and the accounting entries. And finally, for the governmental agencies, where we pay the taxes, we receive all the regulations, and based on that, we submit our tax report every year. So this can tell you that the internal and external users are always engaging together in different transactions, and the whole course of accounting information system is to help you to control the information and the documents included in these transactions. I hope you find this short video useful and hope to talk to you in another video. Thank you so much. Bye-bye.